Right, it's been a while since I've done a new video, so I'll go over a few things today for this weekend. First off, we've got a major breakout above, this is about 2090. I am still seeing a lot of people trying to find reasons to doubt the breakout, looking for tops around every corner. I think you need to do the opposite. I think you need to try and find reasons to be bullish. And the last thing you want to do on a major breakout like this is try and pick a top too early. Now, that being said, this daily cycle, now I'm talking about a smaller degree cycle, not the intermediate cycle. This is an intermediate degree cycle. It lasts for several months. But embedded within the intermediate cycle, you'll have daily cycles. So here's a first daily cycle. And then you'll get a corrective move that retraces some of that rally, but doesn't come back down and take out the low. So you're stair-stepping higher. We are getting a bit mature in this first daily cycle. So at some point here, and I don't necessarily think it's going to have to occur next week, but we're closer to the beginning of a correction than we are to the bottom. So at some point here, we're going to have one of these corrections like this that retraces some of this rally. And you can see we're getting we're stretched, gold is stretched a long ways above this 200-day moving average. And we can't continue to do this without some kind of a corrective move. Otherwise, you risk a serious crash event. It's too early for that. So this is that point in time which I've gone over this many times before. Down here at the bottom on March 1st, when I was trying to get people to buy, most or many people were unable to pull the trigger. Why? Because we had been going sideways to down for 2 months, or maybe there's even 3 months. And recency bias had convinced people that gold was just never going to rally. And of course, during this time, the miners were just getting the crap beat out of them. And everybody saw the sentiment at that bottom. Miners were a business that was going bankrupt. They were all going out of business. There was no reason to ever buy miners again. And then we get our intermediate bottom, and we and all of that, the frustration, the fear in the miners and silver as they went down and down and down, that creates the fuel for this move. And that is why that's part of the reason why we've got such a strong, powerful trending move. The other reason is that the cartel manipulation broke. And I've been on record, posted several times on Twitter and such, that once gold broke out above 2090, the cartel suppression was done. They lost the war. We can quit worrying about that now. There will be some small attacks here and there, but there's not going to be anything significant anymore. And by significant, I mean this. We've had literally, 5, 6 attacks that has prevented gold from breaking out above 2090. That kind of suppression is done. We may get, a small attack here and there, but we're done with anything that's going to create these kind of moves and significantly stop gold from rallying for any significant amount of time. So you can quit worrying about the cartel now. That's done and finished and done with. But we are in that period now where the rally has been strong, it's been powerful, people have been left at the station, and now those people want to chase. They are starting to believe that there is no downside risk, and now they are beginning to be more worried about missing any more of the move than they are getting caught in correction. And that's the kind of sentiment that you see right before you get one of these minor daily cycle lows. And again, I'm just looking for a smaller degree, and usually that means something that only lasts 5 to 10 days, 12 days maybe max, and retraces something, between 38 back to a 38% Fibonacci retracement or a 50%. My guess is that when we do get a daily cycle decline, it might come back down to retest this support zone right here, which is about 2150. So let's just say we get up to 2300, and people that unsophisticated retail, even hedge funds that are worried about not performing, are really starting to get panicked that they're missing the move, and they finally just throw up their hands and they buy, and then we get a top at I'll just pick a number and say 2300, although it might be a little above 2300. That seems to be how these tops occur. They don't occur right when you think they should. They'll very often, they'll either come a little bit before or a little bit after. And because we've built up so much fuel over this 4-year churning period, I tend to think we might go a little bit past 2300 and get our top. And then we get that first daily cycle correction, basically the same thing as what we see right here. Let me just zoom in here. So something very similar to this right here. And that takes gold from, let's say, maybe, 2320 maybe, and brings us back down to test this support zone at 2150. So gold loses maybe $150+ during a daily cycle correction, and all of those traders that couldn't control their fear of missing out, they all panic sell right down here at the bottom, and then we get our daily cycle bottom, and that's the point. Once we get into this, then I will reopen the SMT again, because I don't want people joining the SMT when they're fearful of missing out. I want people joining the SMT when they're afraid that the market is, has rolled over and now we're going down and we're back to this nonsense again. That's when we want to buy. We want to buy when people are scared, when it's hard to pull the trigger. And right now, it is not hard to pull the trigger. It's hard to not pull the trigger because you are watching the market run away from you. And that's what draws people in at these short-term tops. And it also will draw people in at the intermediate tops. Big time draw people in at the intermediate top, because you'll have a lot more weeks and months of going up behind you. So right now, it's not a time to be chasing this market. It's too late in the daily cycle. We're stretched too far above the 200-day moving average. And we are going to need one of these minor daily cycle lows to wash out the to-the-moon sentiment that is starting to develop in the gold market. And like I said, it doesn't have to happen this week. Certainly doesn't have to happen on Monday. But I think over the next 2 to 3 weeks, we're going to get a short-term top and a minor correction that may bring price back down to test this support zone, and then that will create the fuel for the next leg up. And then let me back this chart out again, because ultimately, and I've gone over this in one of my latest Twitter posts or tweets, I guess you would call it. Most of the time, major breakouts have to retest the breakout. So you can already see it. We're already stretching this a long ways. There was so much fuel built up during this frustration phase right here, and during this frustration phase, that it is powering an incredibly powerful and aggressive trending move. So this breakout rally is going crazy to the upside, and it probably still has maybe a couple of months yet to run. So we could easily see gold get to 24, maybe even 2,500, maybe even a little above 2,500. But at that point, the price is going to be stretched so far above this 200-day moving average that you will have created the conditions for a very sharp, very destructive, intermediate degree correction. And that is a bigger degree correction than what I'm talking about here. This is a multi-week, multi-month correction, something that lasts 8 to 12 weeks, 2 to 3 months. And that's where I'm talking about potentially coming back down and retesting this breakout level at, let's just call it 2,100. And then you're set up for the rally to continue in the middle phase of the bull market, which should last several years, 2-3 years. And during that phase, you won't get stretched nearly as far above the 200-day moving average. The price appreciation will be more gradual. The intermediate corrections won't be as severe, and you'll continue up for several years. And then my feeling is that originally I kind of thought we would get our bubble top during this 8-year cycle, but I think I've changed my mind. I think we'll probably get a big move that maybe could take us to 5,000, maybe even a long shot target, maybe even 6,000 or 7,000, and then I think we get an 8-year cycle low. We'll probably have either a recession or another recession in the stock market. The Fed will have to print more money, and then I think gold, we get a really big correction. Maybe we go from 7,000 back down to 5,000 or 4,000, and then we take off into that bubble phase, because most of the time bubbles are ignited at the bottom of a multi-year cycle low. So let me show you a couple examples of what I'm talking about. This is the NASDAQ, obviously the NASDAQ bubble of 2000, but it was ignited here at the 4-year cycle low in 98 as the stock market took a huge move. The Russian debt implosion, long-term capital implosion. This is what got everybody on the wrong side of the boat, and then that's what powered the bubble phase. Very similar for oil. We had a long bull market that started in 2001. This was in commodities. We get the top of that first phase, and then we get a move down into the 3-year cycle low. Huge decline in the commodity complex and in oil in particular, and that got everybody on the wrong side of the boat and set the stage for the final parabolic move into that. And I think I would call this a bubble top. All right, somewhat similar here in gold. We had this multi-month move down into the 8-year cycle low. That kind of set the stage for the final move into the top here in 2011 in the first move to over 1900. I don't know if I'd characterize this as a bubble, but I guess you could say it was a semi-bubble. But basically, you see what I'm talking about. These big moves tend to come as a slingshot out of one of these multi-year cycle lows where everybody just gets on the wrong side of the boat and gets petrified of the market, and that builds the fuel for these big moves that eventually evolve into a somewhat vertical final move into parabolic bubble type top where the general public piles in. So that's my assumption for what I think is probably going to happen. Once this intermediate rally ends, we get a retest to washout sentiment, get rid of that to the moon sentiment, and then we start that middle phase, and we get, go a long ways and create enough enthusiasm and bullish sentiment that we need a big corrective move into a multi-year, 8-year cycle low in gold, similar to what I showed you in those last 3 charts, then I think that's where we are set up for that slingshot move out of that 8-year cycle low and then into our final bubble top. So I may be wrong on this, but I don't think I am. I think we're going to be in the wall of worry phase for gold here for possibly between now and 2027, 2028. And then I think we have probably have a really bad recession, drags everything down, including gold, into a multi-year cycle low. And then the Fed will respond with more printing, and that will drive the final vertical move in gold that will take us to our final target. And I'm on record. I think 10,000 is probably likely. Maybe we could even go higher than that. But I'm now of the opinion it's probably going to become at the beginning of the next 8-year cycle rather than during this 8-year cycle, just because it seems like most of the bubbles come out of or begin out of a multi-year, 8-year cycle low. And for gold, this 8-year cycle low, I just don't think, it doesn't look to me like this is going to power the bubble phase. Now, maybe I could be wrong, and maybe we are starting that bubble phase right now, and over the next year and a half, gold is going to go ballistic to the upside. But I have my doubts.